Happy Friday, my friends. We are been looking at Tesla here. Okay, so whoop-de-doo, one of the most traded stocks out there, Tesla, okay? How can you tell that? You can just look at the volume. Today, $46.6 million worth of volume. And that's just what they post, you know. You never really truly know the exact amount of money in the market, but it kind of gives you a general sense of, you know, today there's been $46 million worth of orders going on in Tesla, or open orders, or what have you. I'm not sure the exact parameters, but Tesla has a market cap of $763 billion. Sheesh. At least that's what Webull is telling us. My goodness. I mean, that's almost $1 trillion. One stock. I mean, you know there's money in the market. It's ridiculous the amount of money in the market. So, what I'm getting at today is, as always, you know your boy, he been peeping the news, and the past week and a half spent a lot of, you know, oh, Tesla's going down. Oh no, you know, the stock price is dropping. What's going on, Elon? What's happening, my guy? What's going on? It's not doing anything. Calm down, people. Calm down. You're getting too worked up. It's ridiculous. Zooming out a little bit, looking at the daily. Okay, so we were at like 264, and now we're at like 230 some. Whoop-de-doo. You know, it's not that big of a deal. To me right now, we're just kind of in the middle of the range on Tesla. If you're a triangular type person, some people, they like, you know, they like using triangular shapes when they're looking at charts, because it gives traders a sense of, okay, this is where I want to go short from, or this is where I want to go long from, okay? And the only problem with that is not using triangular shapes in your analysis. It's not. The only problem with using triangular shapes in your analysis is you don't stick with them. You have a shape or a pattern that you've drawn on your trading view, okay? And it breaks out of your pattern up or down, but either way it leaves your pattern. Now, if it leaves your pattern in your favor in the direction that you were counting on, you stay in the trade. You say, okay, yeah, this is going to be good, you know. But then here's the kicker. I know you're doing it because I've done it in the past too. You have a shape and an idea of how price is going to, a trap, so to speak, of how price is going to behave. And it breaks out of your pattern, but in the direction you didn't want it to. Are you closing off your position and closing your trade and saying, okay, my idea was wrong? A lot of times you're probably not. You're probably staying in it thinking that, okay, well, maybe I just didn't have it quite right. You know, maybe I can adjust it right here. You know, maybe it's actually trying to do this. That all goes down to not sticking with your plan. okay? And a trader without a plan, what's the difference between a trader and a gambler? Okay? This is just personal. So long as I'm formulating a plan and sticking to my plan, okay, I'm trading. I'm trading the market. But when I'm not sticking to my plan and I'm just willy-nilly, changing everything all the time and not sticking to the original setup, then I'm moving more in the gambler territory. Because you're just entering a position just to enter it. Okay? I'll give you an example. Last week I was trading something. I had a position. And I was going off the 200 EMA. It's a moving average, okay? It's like the it's the average of the past 200 candles, okay? That's kind of how a moving average does. So the 200 exponential moving average was like the average of the past 200 candles. So when I see that it's starting to go up, okay, I started to go long, and I had my stop underneath the 200 EMA. And the plan was, as long as price stays above the 200 EMA, then I'm of the belief that the trend is going to go up. So I stay in the trade. And it started going in our favor, and then it broke below the 200 EMA, and it started going down, and we got stopped out. No big deal. Trade's over. But that was executed correctly. But what has happened too in the past, and what could be happening with you sometimes if you're trading these patterns or moving averages, okay, it doesn't matter if it's a simple moving average, exponential moving average, it doesn't matter. If you're trading a moving average, if the moving average is like the basis of your idea, then you have to stick to it. Say you're trading the 50 simple moving average, okay? The 50 moving average. And you're long on something, price is above the 50 moving average, and you're going to stay long on it until it breaks below it. Okay, price is going up, great. Your trade's doing well. You keep holding on to it, and then it breaks below the 50 moving average, and what do? You still hang on to it because you think, okay, oh well, it's just going underneath the 50 moving average. It's gonna, go back up. Maybe you can do it. I can't do that. I don't do that. If it negates the idea, then I get out. I'm going to trade what the market is telling me. I'm not going to trade what I'm hoping the market's going to do. You hope that it's going to get back above the 50 moving average. There is no hope, okay? It's there or it's not. Oh, it went below it and it's going down away from it on the downside, then get out. Your 50 moving average idea is wrong. It's not a big deal. It's not that you're wrong. It's not that you're bad. It's just that idea didn't pan out. So it's nice to be adaptable, and I've talked about this too. You have to be adaptable and getting in and out of the market and changing your viewpoints at times. But when you get to that point where you're actually executing a setup, then you have to stick with it until it's invalidated. So we went off on a bit of a tangent there. But zoom out on Tesla, okay? Look at the weekly. you have this trend going down, okay? You also have a trend going up, okay? So which one are you going to play? If you're playing a triangular pattern, what are you going to do? Well, right now you're kind of in the middle of the triangle. You're not going to do anything. But if price, me personally, okay? If price comes down here and touches this bottom of this triangular pattern that we have on the weekly time frame on Tesla, okay, I'll take a buy right there, in the belief that it will come up to the test the downtrend line. But I'm not going to buy here and then hold it to kingdom come. No, I'm going to buy here, and if it breaks the trend line, then I get out. Trend lines wreck and rock a lot of people. And it has me too in the past. I think mostly because, like I was saying earlier, with the not sticking to your idea, okay? You must stick to your idea. Gold, looking at gold, it's not looking too bad right now. I'll be honest. Gold's having it's holding this area right here. Okay? We're not touching gold until what? Like I was saying on the last video, until it gets up to 2,700. Then I might consider a short on gold. Need to see some pain before I get into gold. Right now, the only thing gold's done is it took a little bit of long liquidity. Okay? That's all it's done. It took a little bit of money right here. So, all we have to think is, okay, did it take enough money over here? Now that it's taken that money, is it going to turn now and take these people's money? It could. I wouldn't be surprised. It had a nice bullish hammer candle here, so you really, and look at that, Tesla's getting bought back up a little bit today. So if you come up with a plan, it's better to stick with it. Yes, you're going to lose a lot of trades. Everybody is. But when you stick to your plan, you're not losing hardly nothing. You know. That's why the markets can't stand me. They can't stand me. It's like a personal thing I have. They hate my guts. Why? Because for 2 years now, I have just refused to give them the money that they want. They want me to be reckless. They want me to stay in my position for a long time. They want me to have a huge drawdown so they can get me to just sell at a loss. They want that. The markets can't stand me because when something's not going in my favor, I get out. They hate that. If you're mad at the markets, the best way you can get back at the market is by not giving them what they want, denying them the pleasure. At the very least, you can deny them the pleasure of getting what they want. Because you know what you want. And when you get what you want, you pay yourself, and it's nice. You know, last week was a great week for me trading personally. Excellent week. This week, not really been anything juicy, you know. I've had a couple ideas, entered a couple ideas, but, you know, nothing really like what last week was presenting. Last week presented some beautiful setups. And this week, the market just isn't giving me what I want. So what am I going to do? Force my trading? No, I don't care. It's not giving me what I want. So I'm not going to give them any pleasure of taking any of my money. That's not happening. Because I'm taking my time on looking for my A+ setup. Just like yesterday, Wednesday. Very tempted to take a setup on something. And the more I'm looking at it, the more I look back on a previous setup and I say, this is A+ right here. I want this. So I'm trying to look at something yesterday and make it match the setup I had before. But it wasn't the same. No matter how I'm looking at it, it just wasn't the same. So price was not giving an opportunity for me according to my setup yesterday as it was last week. And you can't force the issue. It will repeat itself sometime in the future. You just have to keep watching and waiting and wait for the opportunity to present itself, and then you take it. And that's what, I talk about till I'm blue in the face on this subject. But the money factor is what gets people because they need money now. So they're looking for every opportunity they can right now. Your opportunity is going to be different from my opportunity. Everybody has different things that they look at and different things that they deem can make them money. I more base things now on what has made me money, okay? Not what can make me money. So one of the better trades that I had about a week and a half ago, I say, okay, I have it saved and I keep looking at it and I'm working on getting it forced into my subconscious memory of this is what you want. Wait till you see this. And there's a few of them, though. This is like a newer one that's kind of developed. And it paid very well. So I now have this, more learning that I need to do. Oh yeah, 4 years in and still learning. You don't think that you're not going to still be learning 4 years into this business? You're always learning. You're forever a student of the market, okay, and yourself. So all we have to do is just study, memorize, learn, drill it into our mind, and then in the future, anytime that kind of opportunity presents itself, we know we can make money on it because we've made money on it before. So that's kind of how you have to view the market at times. But that's all I have. I just wanted to cover some interesting tidbits that were on my mind. It's Friday. I love everybody, and I hope everybody has a great weekend. And we will talk again next week on the happenings and the crazy way that your boy be looking at the market, which is comedy for some. Peace.